And Japan's benchmark Nikkei index also on a tear. It's hitting a new 34-year high. The index is up more than 9% year to date, far outpacing the S&P. And Carter Braxton Worth is digging into the charts to see where the index is going from here. Carter, what do you see?
Well, I suppose it's always about your time frame and knowing who one is in the market. Day to day, week over week, Nikkei is a bit steep and uncorrected, up 10% in the past month. And you can see it here. It's a textbook setup, well-defined intermediate tops at a common level and a breakout. But that breakout is quite steep, and now all of a sudden it's very popular. Having been unchanged for almost 7-8 months, the breakout is textbook. But I think you fade it if you have the dexterity and you're on the short and intermediate side. By contradistinction, Hang Seng is down 10% and right to a prior low. So you've got 2,000 basis points of spread in a 1-month period between these equally important indices in the Far East. And for fun, let's look at some comparative charts just to set this up. This is a 10-year. The lines are clear. The colors are clear. Blue is Japan. Orange is the Hang Seng. If we were to look at the next time frame, take a look at a little bit longer term, 30 years. They're even money. So which is it? Now go 50 years, and of course this is the tail. Hang Seng is 5x that of the Nikkei. But what we know is that each is under a certain amount of demographic pressure, of course, and in many ways they have the exact same birth rate. These are fundamental things, but at 1.2, 1.3 each per woman, it's a bad business plan, if you will. Just to end with, there was Shaker furniture, beautiful stuff. They don't even use nails. They use the wooden pegs, but they didn't believe in procreating. That's a permanently bad business plan.
So, Carter, you also put out a note today on TLT. Play for a bounce? Yeah, play for a bounce. So we're at this point, we think you've had a fairly extreme move and rates lower from here. All right, Carter Braxton Worth, thank you. You bet. Guy, you were snickering during
no contradistinction. I mean, his vocabulary. I could listen to him.
Something new. The more you know. I feel like that should be playing all the time.
Carter Worth should do a More You Know, unlike the NBC.
He really should.
I saw him with you do one, Carl. I saw him with Brian Sullivan. That's what we're here to talk about. TLT, listen, went from I think 84 to 100-ish. It sold off. I think Carter's saying, the sell-off over the last week and a half, 2 weeks is enough. It can basically start to reaccelerate to the upside, which means yields go lower. If yields start to go lower, is that going to be further ammunition for the broader market to go higher? So we'll see. But Carter's call on TLT technically makes a lot of sense.
Yeah, and you're in and out of TLT.
In and out, yeah. Covered. I think I'll get a chance to put it out again.
Japan.
I was waiting.
Yeah, your acronym.
I was waiting.
Does that worry you?
To take a term from Guy's generation, I'm not digging the digging on my diggy. So listen, I'm not going to sit here and argue from week to week or day to day what the price action is going to be on DXJ. What I'm going to say is that I think that China is priced where it is, relatively speaking, because China is viewed as an impaired asset in the early innings of trying to get things corrected versus Japan being in the relatively early innings of an expansion, change in monetary policy, and corporate oversight. I would still prefer the outperformer given that context.
I think picking up where he left off, this is a bigger, the story here is that there's a mass exodus from China related, trying to figure out where the most hospitable place to put your money. And those are the ones that are gaining the attraction while China continues to lose.